Okay, so in this video, we're going to work through the solution by answering the required. So remember, the required asked us to prepare the profit and loss statement for the year ended 31 August 2021, and that is the consolidated profit and loss statement. So we'll jump into that now. The important aspect that the statement asked us, or the question asked us to start off with profit for the year. So that is very important to take note of. So what I'm going to do, I'm going to set up the statement, and then from there we will be answering the required. Okay. I'm going to do this in two parts. I'm gonna set up I'm gonna, when I say two parts, I'm gonna do this video in two parts. The first part is going to work through this question, showing you how to set up, and then answering, and then working through the calculations. Okay. When I say two parts, the calculations I'm going to work through in two parts. The first part is doing the calculations for all for the parent and all the subs, but excluding the foreign sub. Then in the next video, I'm going to continue the same on the same workbook, but then bringing in the foreign sub. The reason for that is just to show the CTA1 students how it would look without the foreign sub, and then in the next part I bring in the foreign sub, so you can have a clear distinction between how to look with the foreign sub and how to look without the foreign sub. Okay, so let's get going. So when they ask you prepare, so you must look how it would look in the financial in a set of financial statements. So what's important, you must start off with a company name. So it is Cooldrink Limited, Cooldrink Group, I think it's called Group, I'll confirm now. Cooldrink Group Ltd is going to be the statement name, consolidated statement of profit or loss and other comprehensive income, and then the period. So income statement is always for the year ended. Okay, the year ended. Now the third part is the date. The date is 31 August 2021. Okay, so there we go. So usually we would start with sales, cost of sales, gross profit, and then other income, other expenses, profit before tax, and then we have income tax expense, and we have profit for the year. So they don't want us to do that. They said start with profit for the year. Okay, so this year alone is 35 marks out of the 40. So we start with profit for the year, then we're going to have other comprehensive income. Okay. Okay, so for other comprehensive income, so let's just highlight that. Now, remember, there are two aspects to remember with other comprehensive income, in no particular order, but number one is whether the amounts must be gross of tax or net of tax. They told us it must be net of tax. The second aspect is to split up the other comprehensive income section. Other comprehensive income is split between items that may not be reclassified. Okay. So items that may not be reclassified to where? To profit or loss. Okay. And then the second heading is items that may be reclassified to profit or loss. So what you must understand, may not, meaning you're not allowed to reclassify. Items that may means you are allowed to reclassify. It's not necessarily a requirement. Okay, so you can choose, but you have to be consistent. Okay, so that's very important. So how do you know what items may be reclassified and what items may not be reclassified? So basically over here, there's two places you will find it. One, it may be in IAS 1 under the section, and it'll tell you which can and which can't. But generally, it is found in the standard, specific to that item. So, for example, In IAS 16 PPE, we know a revaluation gain or loss will go to other comprehensive income. Now, it may be in IAS 16 that will tell you that a revaluation gain or loss may not be reclassified to other comprehensive, may not be reclassified to profit or loss once you dispose of. So I can tell you now that a revaluation gain or loss on PPE, once it is disposed of, you are not allowed to reclassify it to profit or loss. So a revaluation in this example on land will fall under this heading because I-16 tells you it cannot be reclassified. Okay, so that is basically what you must be aware of. There may be some items also regarding to financial instruments, for example, fair value gains and other comprehensive income. Financial asset measured at fair value through other comprehensive income. Some of those may not be reclassified to profit or loss. So this generally the standard dealing with that line item will tell you whether or not it can be reclassified. Okay, so just be aware of that. So remember that when you do deal with other comprehensive income, there are two parts to it. In one, splitting between items that may not be reclassified and items that may be reclassified to where? To profit or loss. When can you do the reclassification? Only when you dispose of the item. So the item is no longer on your books. Okay, while the item remain on your books, it will always be over here. Okay, so just be aware of that, but you want to split between those stuff. Okay, then the second thing is where you will would be whether the amounts must be gross of tax or net of tax. In this question, it is net of tax. Okay, so just be aware of that. So that is basically what you want to do. But let me just complete it quickly. So for our purposes, items that may not be reclassified would be revaluation on land, and it would be share of associates profits. Okay, so these are ones that cannot be reclassified, share of associates profits. So those will be under this heading, items that may not be reclassified. Okay, then you must always leave space because you may miss as you read through the scenario. So always leave space. The next one you want that is specific to how can I say to CTA2, when you have a foreign subsidiary, exchange differences on translating foreign operations will be under the heading will be under this heading over here that you may reclassify. Okay, so what can we call it now? Exchange differences relating to foreign operations. Okay, so for example, this over here, if you dispose of a subsidiary, if you dispose of a foreign operation, then any previous foreign will be able to be reclassified to in exchange differences relating to foreign operations. Will you will be allowed to reclassify it from how can I say from other comprehensive income to profit or loss in the year you dispose of it. Okay, so just be aware of that. Let's just remove that. Let's make that also bold because it's a heading. Okay, you want to leave some spaces just in case there's more line items. So I'm gonna leave a space. So I'm gonna do this quickly. Okay, so I'm gonna leave a space and then we're gonna have this. Once again, I'm gonna leave a space over there. then that's going to be the total. Okay, so we're going to add up these and we're going to get a total. We're going to add up these and we're going to get a total. Okay, then that will end up being other comprehensive income for the year. Then we're going to have other comprehensive income for the year, and this is going to be net of tax. We're telling them it's net of tax. So this amount over here will be net of tax. That amount over there would be net of tax. If it was gross of tax, then we would still have these line items, but we'd also have a line item called income tax. We'd have a line item called income tax. So if you're not sure, you can look in a company's other comprehensive income. If you see a separate line item, income tax, then you know these amounts are gross of tax. If you don't see income tax, then it is safe to assume that these amounts are net of tax. So that's how you can pick it up if it's not crystal clear. Okay, then this will give us total comprehensive income for the year. Okay, so remember, total comprehensive income is basically the sum of profit for the year and other comprehensive income. Okay, so other comprehensive income would be that total plus that total. Total comprehensive income will be that plus that. Okay, so just be aware of that. So now, once we are done with that, so remember, we're starting with profit for the year, then we're putting in other comprehensive income. All they are testing over here, they are testing IAS 1. Can you present a income statement as it should be presented? Okay, so we must split between items that may not be reclassified, items that may be reclassified. So they want to know whether you know where to put it. Okay, then the second thing is that other comprehensive income section may be gross of tax or net of tax. In this case, it is net of tax. Once we are done with that, then we need to attribute. Okay, so we're going to have profit for the year attributable to who? Owners of the parent, and then non-controlling interest. Okay, and it will have a total. I'll do it like that. Okay, then same thing. We attributing profit, and then we're going to attribute total comprehensive income. Okay, so take note, you're not attributing profit and other comprehensive income, you're attributing profit and total comprehensive income. Okay, total comprehensive income attributable to. Okay, and then who's it attributable to? Owners of the parent and NCI. Okay, so just be aware of that. Okay, so I'm going to do this. I'm going to say format. Here we go. Okay, so that is the presentation. Okay, so this is how it is presented. If they didn't say we must start from profit for the year, then above this line item, we'd have sales, cost of sales, gross profit. Other income, other expenses, profit before tax. Income tax, profit for the year. Okay, so just be aware of that. So they use a one statement. One statement means it starts from sales up until this line item over here. Okay, until this line item over here. If it was a two-statement approach, we in the first part of the statement, on page 1 of the statement would be only profit for the year, and then page 2 of the statement would look exactly like this, starting from this point all the way down. Okay, so just be aware of that. Okay, so that is the setup. So just be aware of that. They are indirectly testing IAS 1 that you did at the beginning of your year. Okay, so now let's work out. Now we're going to get to this. What I can tell you, profit for the year, this full marks for this is 40 marks. Okay, of the 40 marks, 35 marks is for profit for the year. So if I'm you, don't spend too long on this. You want to do it quickly, and then because here's all the marks, where all the marks are lying. Okay, but remember, you're only going to get 35 marks if the answer ends up here. So just remember, once you do calculations, bring it here as soon as possible. Okay, if it's not in this line item over here, you're not going to get any marks because they didn't ask you to calculate profit for the year. They asked you to prepare the consolidated profit and loss statement. Okay, so let's go on to workings. Okay, so how I like to do my workings in a question like this, I'm going to have my working 1, and then I'm going to have profit for the year. Okay, profit for the year, I know it's going to be made up of Cooldrink. I know it's going to be made up of Cooldrink. I know it's going to be made up of Pink Drink. I know it's going to be made up of bottles and Slim Water. Okay, Pink Drink, bottles, Slim Water. So I know those are the companies that's going to appear in profit for the year. Cooldrink is a parent, so 100% of the parent's profit is going to be in the consolidation. I mean, yeah, Cooldrink is a parent, so it's going to be 100% is going to be in the consolidated P&L. Pink Drink is also Pink Drink is a subsidiary, so 100% will also appear. Bottles is also a subsidiary, so 100% is also going to appear. Slim Water is an associate, so only our share of the associate's profits will appear in profit for the year. Okay, so I know that is the split. Okay. What I'm going to do, so because I know that's going to be profit for the year, I'm going to do it over here. I'm going to say equal profit for the year. Okay, so I know once my numbers are being plugged in, it's going to automatically pull through over there. I'm going to tell them they can go look at working 1. Okay, so I'm going to tell them they can go look at working 1. So if working 1 is not right, they will come look to working 1. Okay, so now I know my 35 marks is going to come along nicely. Okay, so I'm going to have working 2. Okay, so I'm going to have working 2, which I'm going to have for Cooldrink. I'm going to have working 3, which is going to be for Pink Drink. So remember, in this video, I'm not going to do Pink Drink because I'm going to exclude Pink Drink, which is the foreign sub, and then I'll bring it in the next video. Okay, and then I'm going to have working 2, and I'm going to have working 4, which is bottles, and I'm going to have working 5, which is Slim Water. Okay, then from there, I will have more workings to get the underlying numbers. So I know I need the profit for the year for Cooldrink. I know I need profit for the year for bottles. I know I need profit for the year for Slim Water and all of those type of stuff. So I'm going to start off with bottles and Slim Water. Then I will do Cooldrink in this video. And when it comes to Cooldrink, I will exclude the items that relate to Pink Drink. Then in the next video, I will do Pink Drink. And then you can see the difference. Okay, so let's start with bottles. My approach is as follows. Remember, we ultimately want profit from a group perspective. So your approach should be work out what is profit for the year or get profit for the year relating to bottles as a separate entity. Once you have that, then you make the necessary adjustments to move it from a separate entity to a group perspective. So, and remember, the only difference between a separate entity and a group perspective is anything relating to group adjustments. Group adjustments is twofold. One, anything relating, so adjustments relating to acquisition and then intercompany transactions. So remember, it is adjustments. It relates to, so group adjustments are two things: adjustments relating to acquisition transactions and adjustments relating to intercompany transactions. Okay. So what we're going to do, we're going to get profit for the year. So let's have a look at profit for the year. So I'm going to start with bottles. Okay, so here I'm going to work on bottles. I think bottles are the second. So we work on, that's pink drink. Yeah, here we go with bottles. Okay, so here you can see Cooldrink purchased 80% of the voting rights of bottles on 1 January. On this date, we obtain control. We have all of that. Okay, so we don't need that. So what's important, we want to identify any group adjustments at acquisition and any group adjustments relating to intercompany transactions. So here we can see all assets and liabilities of bottles were deemed to be fairly valued at acquisition. Okay, so that means there's most likely no at acquisition. There are no group adjustments relating to at acquisition transactions. The only thing you must just be aware of is if there is bargain purchase gain. Okay, then over here, here we can see your intercompany transactions. So now we can deal with that. But the first part, get profit for the year from from bottle separate entity point of view. Then we make adjustments relating to then we make group adjustments. Okay, so let's have a look. So we have to work out profit for the year. Okay, so they gave us, so take note, bottles is the third column. So just make sure you get the right column. And then they're giving us gross profit and other income. So let's go and work this out. So I'm going to take that. It is gross profit. Let me just share my screen. Okay, so bottles, we're going to have gross profit. Okay, so the it is gross profit. There was other income. There was so gross profit, other income. I think there's operating expenses, and then there was income tax. Okay, so this is basically profit for the year. So this profit for the year, this is basically from the separate entity perspective. Then we need to ask ourselves a question: are there any group adjustments that need to take place? Okay, that is basically what we're going to have to ask ourselves. Okay, so let's have a look. So if I go back, then it is other income, which is 212. So other income, which is 212. Okay, then we have operating expense. We have gross income, other income. If we go all the way down, here we can see operating expenses and income tax. Okay, so operating expenses and income tax. So this here is operating expenses, and income tax is 474,205. Okay, 474,205. Income tax is 474,205. Okay, operating expenses I copied, so I'm going to paste it. So there we go. So now profit for the year from the separate entity perspective is that. Okay, so this whole thing is 1 mark. Okay, don't get much marks for this. So the whole thing is 1 mark. Okay, for all of that is 1 mark. So you must be very quick with it. Okay, now what is important to take note is the following. What is important to take note is the following. Okay, now